Good morning. You're watching a remote broadcast of Business World Live. I'm Jes Delos Santos. It's 10:01 in the morning this Monday in Manila. We're half an hour into the trading day. Let's go first straight to our top story. Economists are painting a more bleak picture of the economy, with a poll saying GDP may have contracted deeper in the second quarter. A Business World poll of 17 economists yielded a median decline of 11% in the April to June period, dropping further from the contraction of 0.2% in the first 3 months of the year. If realized, this would bring GDP fall to 5.6% in the first half, exceeding the government's expectation of 2 to 3.4%. GDP data will be released on Thursday, that is August 6. Economists were unanimous in highlighting the prolonged lockdown and the expected slump. Makoto Tsuchiya of Oxford Economics says stringent measures during the lockdown led to a collapse in consumption and investment spending, noting that surging unemployment and falling remittances compounded the problem. ANZ research also says the maximum impact of the restrictions would be on private consumption and investment. Meanwhile, Continuum Economics' Jessil Yu says government spending has been a, quote, silver lining amid the COVID-19 boom, saying it expanded an average of 40% in the second quarter. RCBC Chief Economist Mike Ricaport says the economy may have already experienced the worst, with the lockdowns being eased June. ING Bank senior economist Nicky Mapa says he expects the economy to remain in the negative territory until the end of the year, with growth only returning in 2021. And speaking of restrictions, Metro Manila and some nearby provinces are back under modified ECQ starting tomorrow up to August 18. This means trains, buses, jeepneys, taxis, and TNVS units are again banned from plying the roads in NCR, Bulacan, Cavite, Laguna, and Rizal. The only public transportation allowed will be public shuttles, frontliners, and essential workers permitted to work under MECQ. President Rodrigo Duterte approved his cabinet's recommendation to tighten restrictions in these areas as a compromise for medical groups, calling for a timeout in the form of another ECQ. This as COVID-19 infections in the country breached the 100,000 mark. The health department recorded over 5,000 new cases yesterday, the fourth straight day of setting a new single-day record high infections. Despite these numbers, the chief executive said health workers should stop making a spectacle out of their situation and making it look like they're ready to stop working. President Duterte urged frontliners to extend their patience, claiming that the government is doing everything it can to contain the pandemic. All right, let's have a quick check now of how things are faring for our local shares here. And I can tell you as early as now, things are already looking gloomy after those developments in which last night you have the interagency task force and the president, of course, approving their recommendation to revert Metro Manila back to modified enhanced community quarantine. And with that, you have local shares already on a decline here, down by as much as 3%. At the start of the trading week here, we are now down to 5,750. Last week, of course, we already ended the week on a bit of a pullback here, down 0.6% to 5,928. Really unable to get our feet back up to 6,000 weekly. Last week, at least, the index slumping 1.25%. Down for the fourth straight week. In fact, we have been in the negative 6 out of the past 7 weeks. So question is, can we see things heading north from here? Remains to be seen, especially now that once again, you have Metro Manila reverting to stronger quarantine measures after the IATF said that they are heeding the call of medical professionals for a bit of a time out. Mike Ricaport of RCBC seeing, you see shares floating around 5,750 to 5,850 for the week, with immediate resistance at 6,000 to 6,150. But with new leads coming in, let's see how that might actually affect sentiments here. There are a few other clues, though, that investors might be taking a look at. You have inflation figures coming in this week, August 5, and that is Wednesday. And then come Thursday, you have GDP figures for the second quarter coming in. Again, you have expectations there's going to be a deeper contraction here, expected to signify that the country is now in recession. But Chris Magnon of AAA Southeast Equities is more optimistic. He says despite things already looking bleak economically, the index might traverse the opposite way since it has been moving irrationally since the new normal. According to him as well, the index is due for a technical bounce accompanied by an increase in trading volumes. This time, though, I want to drive your attention to one particular sector, that is the property space, and things not looking so promising for this particular index here. For the past 6 years, the property index has been surpassing the PSEI's performance, but not so this year. The property index has so far declined, as you can see here, by over 32%, sinking deeper than the PSEI's over 24% decline year to date. That, of course, is on the back of commercial and residential demand remaining weak as people were forced to shift spending to essential goods. At the same time, you have a number of concerns here. You have the departure, of course, of Philippine offshore gaming operators, as well as a plunge in remittances by OFWs, of course, one of the main markets here by our property sector here. According to Robert Ramos, who heads the Trust and Investments Group of RCBC, he still prefers consumer sector at this time, but according to him as well, the property space is going to outperform post-COVID. But for now, people are avoiding malls and they aren't buying properties. At the same time, there might be a few upsides. However, you have cheap valuations, the BSP's accommodative stance, and the government's infrastructure push. And in fact, that might actually attract long-term investors here. According to Christina Ulang of First Metro, you have the property space still a top choice in the long run, and that one cannot ignore the property index to ride a market rebound. Now, time to have a quick check on particular property stocks here, kicking off with Vistaland. They are allotting 25 billion pesos for their capital expenditures in 2020. That, however, is lower than their 2019 capex of 38.29 billion pesos. This as they revisit plans for the year amid the pandemic. According to them, for their 2020 capex, 90% will go to construction and land development, and the remaining 10% will go to land acquisition and payables. According to their chairman, Manny Villar, they have the capacity to fast-track construction if they deem it necessary. Add to that, that sales have been improving 70% of pre-pandemic levels since June due to their digital push. Looking, however, at how the stock is performing, at least so far at the start of the day, they are the worst performer here in the property index, down by as much as 4.5%. Only a number of stocks in the property space, in fact, starting the day in the green here, the likes of Double Dragon, which is already up 0.6%. But from there, let's check in on Mega World on the negative territory here at the start of the trading day. This despite them already closing the deal on their $350 million 7-year bonds. It is their first offering in 7 years. Coupon rate for that offering is at 4.125%, the lowest by any local firm for such notes. According to them, this move puts them on track for recovery, at least according to their Chief Strategy Officer, Kevin Tan. Proceeds from this program will go for capex, land banking, and loan refinancing. They are bullish, however, on the BPOs needing more space due to physical distancing. Again, however, Mega World still not performing so well here at the start of the trading day here. They are down 2 3/10%. But like what I mentioned earlier, one of the major leads this week, corporate earnings, and they are already streaming in. Let's start off with URC here. Net income coming in at 3.8 billion pesos for the second quarter. That is up 76%. The consumer stock really proving to be resilient here. Net income surging double digits amid revenues coming in flat. Looking at sales here, it was just up 1%, at least for the April to June period, to 34 billion pesos. They did, however, allude to their gains. That's on the back of strong operating performance and foreign exchange gains here, as well as attributing it to increased demands for some products here like snacks, noodles, powdered drinks, animal feeds, flour, and sugar. Now, also looking at first half figures here, net income was up by 13% to 6 billion pesos, with operating income climbing 8% to 8.2 billion pesos. Net sales, however, coming in flat at 67 billion pesos, according to their president and CEO, Erwin Lee. He is relieved after, of course, this figure is coming in better than severe lockdown forecast here. According to them, it's now time to secure the here and now while preparing for recovery efforts. Looking at URC, however, they are down 2.2% at pricing at 119 pesos and 70 centavos a piece, pretty much riding that decline, the sell-off that we've been seeing across the local bourse today. And then from one consumer stock, let's move on to one mining player here. I'm talking about Philex here, turning things around here, at least for their first half figures here. Operating revenues boosted rather by favorable gold prices here, with second quarter net income coming in at 300 million pesos. That's way higher compared to their 93 million peso output in the second quarter of 2019. Likewise, first half core net income coming in strong at 402 million pesos. That pretty much reverses their 19 million peso net loss in the first half of 2019. They attributed as well to improvements in their mine and mill operations and generating cost efficiencies here. At the same time, according to them, they were allowed to operate amid enhanced community quarantine measures, as they are an export-oriented firm. At the same time, they've already made adjustments to their supply chain model based on new normal in order to mitigate the risk of possible disruptions in the flow of materials and supplies here. At the same time, they continue to generate higher tonnage since the first quarter. Looking at the performance of Philex, however, you'd see at the start of the trading day, things already looking good for them, at least bucking that sell-up that we're seeing in the local bourse here. They are up over 4%, priced in at 3 pesos and 32 centavos a piece. Here are other stories we're watching this morning. Inflation may have slightly picked up in July on the back of an uptick in food and transportation prices as COVID-related restrictions eased. A survey of 16 economists yielded a median estimate of 2.6% for July's headline inflation. If it turns out to be accurate, it will be faster than the 2.5% inflation recorded in June and the 2.4% figure reported in July last year. It's also the midpoint of the 2.2 to 3% forecast by the BSP for July, and well within the 2 to 4% target inflation this year. Analysts agree that food and higher oil prices would be the biggest factors for the faster rise in last month's commodity prices. Most of the national government debt has surged to over 1.7 trillion pesos in the first half of 2020 as it continues to boost its war chest against COVID-19. This is almost a 70% jump from the debt incurred during the same period last year. Data from the Bureau of Treasury showed June borrowings nearly quadrupled to about 213 billion pesos. Most of the funds were borrowed from domestic lenders, while less than 30% came from external sources. Both domestic and foreign debt saw an uptick of almost 300% in June. Domestic borrowings rose to over 156 billion pesos, while foreign debt climbed to almost 57 billion pesos. As of July 1, the government has raised around $7.6 billion from external loans and grants. 7 of these loans, amounting to $2.4 billion, were incurred only in the month of June. The Finance Department is rolling out a new tax on luxury goods this year in favor of pushing for the enactment of the CREATE bill. Finance Assistant Secretary Tony Lambino says there is no immediate plan to reintroduce luxury taxes in the Comprehensive Tax Reform Program. This is in response to Albay Representative and House Ways and Means Committee Chairman Joey Salceda expressing support for a luxury tax. Salceda believes that imposing such taxes improves general welfare. But the lawmaker noted that the government needs a very strong tax administration measures to ensure its collection. Recall that House Bill 5445 was filed in the 17th Congress to widen the 20% excise tax to cover non-essential goods. That's on top of adding a 2% ad valorem tax on certain properties and membership in clubs and resorts. However, this bill did not make it through committee level. As Metro Manila heads for a stricter form of quarantine yet again, we'll be seeing a continuous boom in e-commerce. Well, to talk about how they've been riding this wave so far, we have Prashant Kala. He is the country manager of Shopback Philippines. Good morning, Prashant. Great to have you here with us.
Thank you for inviting me.
All right, Shopback as an online rewards platform, were you able to ride on that e-commerce boom that everyone's been talking about since the onset of the pandemic?
Absolutely. So to be honest, I mean, it's not a very good thing to say at this moment. I hope things get better. I really want to get back to normal life as everybody else wants to. Shopback started in Singapore 5 years ago, and we've been in Philippines for a long time as well. But I think the e-com boom actually saw what people were waiting for. Right? People need more convenience. Lazada, Shopee, Foodpanda, they've been doing great. What Shopback does is we just plug and play with these guys. So for example, if you want to order food from Foodpanda, you just open the Shopback app, click on Foodpanda, you order your food, and you get some kind of cash back. So it's around 3 to 4% for Foodpanda right now. With the e-commerce tide that has happened, right? So we have seen orders surge more than 30% for last year's last quarter, which is e-commerce biggest quarter of the year, right? So it has surged that much. With the ECQs in place, with the delivery services getting very good, you see Shopees, you see Lazadas giving out free deliveries. It has really boomed right now, and I think it will keep on surging more and more.
Okay, give us specific numbers here in terms of orders. How much of an increase have you seen over the period since the onset of the pandemic back in March?
Absolutely. So in quarter one, we were able to do somewhere around nearly 800 million peso worth of business in Shopback every month. So that's the number of orders that we were providing, and users were making around 6 to 7 million pesos in cashback. In quarter two, every month we are doing more than 1.5 billion peso worth of sales in Philippines with all our partners. We have more than 500 partners, and we've been able to give around 10 to 11 million pesos cashback every month. So you see, it has surged 100%. In terms of the sales. Now, talking about just in terms of the e-commerce value, if you see, more than 55 local grocery stores have sprawled up in Metro Manila only. So that's how fast market is also responding, right? People need food and groceries right now at their house, and that's what people are providing. And everybody with Shopify and with small little e-commerce tools that they can use, everybody's coming up with an e-commerce store, which is actually in need of the hour. So that's what we are seeing. It's drastic 100% to nearly 150% jump from the last quarter.
And do you expect things to actually be consistent from now on? After that surge, do you see things faring quite better as well in the coming months?
Absolutely. So I think Philippines was gearing up to reach where it has reached right now. The reason initially was the slow adoption in terms of like people want to trust the app before they start using it. Right now they have used it, and again, it was a necessity. We had nothing else, but we had to use this now. But moving forward with the convenience that is coming up, and I think COVID will take some more time to go back from our lives. It will keep on rising, but soon after that, you would see the kind of savings you can do online, the kind of convenience that you have online. This is not going to go back. It will just keep on going up, and I'm projecting that 100% quarter-on-quarter growth at least for 2020.
And how many new consumers have you had on board since March?
We get nearly 60 to 70,000 new consumers every month. Starting March, it was the same amount of number. I think January to March, it was around 50,000 per month, but now it has around 70 to 75,000 per month that we are seeing. Just to give you an insight, as I said, last quarter of any year is the e-commerce tide. You have the 11/11, the Singles Day sale, then you have 12/12, which is also powered, and there's Christmas celebrations, there is Black Friday, people shop. The amount of new customers that we see on a daily basis on Shopback right now is twice that what we saw last year. So that's the surge that we are getting right now of new customers.
Now, in terms of the service or product providers, how many went on board Shopback's platform here since the crisis started, or since at least quarantine measures were implemented in Philippines?
So we were initially working with around 400 service providers. That includes Lazada, Shoppees, the likes of Foodpanda, Grab, everything. But starting April till last month, we were able to get around 120 new merchants on Shopback. As I said, there are your small local grocery delivery players which want to expand, and because the need of the hour is there, and like everybody needs to order groceries, they're also coming up with it. So everything that is available online, we're trying to get them on board. I think we'll get around 50 to 60 more by this quarter as well.
What do you think changed in terms of a perspective here, coming from the merchant's point of view here? Well, what change in perspective have you seen? And at the same time, do you feel like there's no longer that much fear of how such cashback programs might actually affect the bottom line of their business?
I think if you see, so I'll just take a step back and explain how exactly the market works, right? So when you go to Facebook, when you go to Google, or you go to any other advertising platform, you click on an ad, you land onto any app, you make a purchase, for example. We do nearly the same thing in a way that people can promote, or an app can promote themselves to Shopback. What we are doing is we are just sharing whatever any online platform makes out of it. We are sharing our blessings with the users, because obviously we are growing because of them. It doesn't hurt the bottom line, because we are not asking, or any service provider does not ask for like 50 or 60% commission from the partners that are there, right? So partners also decide what they want to give. We also decide what we want to give back, and it's a win-win situation for everybody.
All right. And at the same time, how has the spending and shopping behavior changed during the new normal? What segments had the most demand, based from your experience, at least during the start of the quarantine period?
Very, very, very interesting. I mean, we all know essentials have sprawled up, groceries have sprawled up, but if you see some very interesting things, baby diapers, mom and baby products, female beauty products have really sprawled up. They are seeing much needed spike in demands. Groceries, yes, and groceries not just in terms of demands, but in terms of supply has also increased. As I said, more and more grocery stores, local grocery stores have come up in the Philippines. In terms of, and very importantly, we all think that travel has really declined. We all know that travel is really struggling right now, and we hope it gets back soon. But apart from that, if we see, fashion has also taken a bit of a hit in a couple of months when the lockdown actually started, because people did not really know what to shop on, and do I really need to go out, and do I really need to buy new clothes? But if you see one segment of fashion, it's workout from home, gym equipment, workout attire. It's really gone up. There was a 362% increase in workout essentials working from home. So that is one market. If somebody's trying to buy, Nike, Adidas, Zalora, they are giving great deals. You should just check it out.
But also, what I'm interested about is, in terms of demand, geography-wise here, is it still pretty much concentrated in NCR, or did you also see a bit of a spike here in rural areas?
So NCR still takes the cherry, right? It's the bigger piece of the pie that is there, but you will see a very high demand from Cebu. You have started seeing, we have started seeing a lot of demand from Davao, even Baguio. Baguio is really growing very, very tech friendly. It's a very tech friendly city. Pampanga, we see a lot of demands coming in. So it's not just restricted to Metro Manila, but the chunk of it comes in from the side. But Cebu, Davao, Baguio, Pampanga, they're really fast catching up.
Mm-hmm. At the same time, with quarantine measures were somehow slowly being eased prior to that announcement last night, and some offline businesses already restarting, was there a change as well in demand for Shopback services?
I think first of all, it's a great thing that the quarantine has been restricted, but it will be loosened up because people can go back to their normal lives. But I think, as I said, because convenience becomes the key factor that we have in our lives, now people are still preferring to let's say an order food online. Me myself, I have just gone out once in last 1 month to have a meal with my friends when it was allowed. But yeah, I'm still ordering more and more on Food Panda, more and more on Grab, because again, it's not just, it's one, mentally you need to be at peace. Second, it's the convenience and the safety factor that comes along with it.
All right, and then lastly here, Prashant, you have new measures here, at least running in Congress, to tax the digital economy. How might that impact Shopback?
I think for Shopback, we will have to see how will that change in terms of the pricing. But again, because we are very dependent on what our e-commerce partners are giving out, so we will have to wait and see how Lazada, Shopee, or other partners decide on how it's going to go. We are not a paid service, so that's why we will not be taxed in from our side. So whatever earnings you are getting from Shopback, it's like a reward, right? So you do not get taxed on that kind of rewards because it's not an earning for Shopback or for anybody else. So that ways we are not yet worried about that.
All right, thank you very much for your time this morning, Prashant Kala, Country Manager of Shopback Philippines.
Thank you for having me, and have a great day ahead.
All right, we're a few minutes closing in on 10:30 a.m. rather this morning. For now, let's have a check of how things are faring for the local shares here. And things still not looking good here. We are declining, plummeting close to 3.25% here, really down to 5,736.39 here. That, of course, follows the approval of President Duterte, the recommendation from the IATF to actually revert Metro Manila to modified enhanced community quarantine. We have yet to get clarity, however, on the specifics of that decision here. We have yet to see how exact guidelines really on what's going to happen. Since if it's going to follow former MECQ guidelines that were being followed in NCR previously. Again, we have the index declining 3.25% down to 5,736.36 here. But one particular stock here I want to keep an eye on, PLDT, as you can see here, riding the sell-off as well. They are down close to 2.5%, now at 1,307. PLDT was one of last week's most actively traded stocks with 540,000 shares exchanging hands. It's after it immediately rolled out its 5G services following the fresh threats from President Duterte against telcos during his SONA. Again, PLDT starting the day in the red, pretty much joining that sell-off. However, if you try to take a look at this chart as well, PLDT only one of a few stocks here that has been gaining year to date, but that same cannot be said, at least at the start of the trading week here. They are down 2.5%. And then lastly, let's have a quick check of Metro Bank. Their earnings figure coming in weaker for the first half of the year, down 30% to 9.1 billion pesos. This as a boosted loan loss provision to 22.8 billion pesos in the first half. Their core business remains strong, however, with pre-provision profit rising by as much as 61%. And balance sheet remaining solid. That's according to Fabian D, their president. According to him as well, the bank is doing early buildup of larger provisions to ensure readiness for future risks. And looking at the performance of the stock, however, they are down 1.6% to 33 pesos and 70 centavos a piece, pretty much joining that sell-off that we have been seeing in the local bourse. Again, the index declining by over 3% after Metro Manila has been reverted to modified enhanced community quarantine. And that's a first look into the business day this Monday, August 3, 2020. Catch us again tomorrow at 10 a.m. I'm Jes Delos Santos, VR1 News.